The title of the challenges and opportunities in the changing world, we're really going to try and position from two perspectives, one on the economic piece and the second around particularly regulatory changes and what might be happening in emerging markets.
Yes, Lee, I think you're right. We have come up out of the GFC, but still the picture looking out from Australia is mixed, or patchy, as economists are inclined to say. There is modest recovery at best in the major developed countries, I should say. Thinking obviously of Europe, there is modest growth, but there's an enormous debt overhang in Europe, and including countries like Britain. Yep. Which have not experienced levels of public debt for, in some cases, more than a century. So growth in Europe is slow. It's also threatened by the fact that the euro is appreciating relative to the US dollar under the similar influence to ourselves. And so there's modest growth possibly tailing off there. The Australian economy, linked obviously more to Asia than it is to Europe or the United States these days, means that we're experiencing the strength of China and greater Asia reflected onto our own economy. Yep. So for us, as everybody knows, the big issue is the so-called two-speed economy, the impact of the rapidly appreciating Australian dollar on economic activity, and the shape of economic activity for us is the big issue. So
you have the two-speed coming out primarily about those associated with the mining and services associated
those that are directly exposed, obviously the mining and export-oriented sectors that are linked into Asia are doing very well.
But the retail, manufacturing side, tourism,
non-mining manufacturing, exports of education services.
Yes.
Anybody else whose exports are affected by the exchange rate rather than by China-driven demand are finding life very tough indeed.
What I was going to say about challenges and opportunities in a changing world is that I have to think, and I think everyone here has to think about just how much changed with what Australians call the GFC. I actually describe it as GFC 1, and you might wonder why.
Is there a GFC 2 there, Alex?
That's why we're wondering why.
Yeah. But that's why I call it GFC 1.
Right.
Okay. And what really changed, I think, was that the leaders of the G20, that group of 20 countries that makes up 80% of world trade, 85% of world GDP, over 2/3, I think, of world population, got together, and they got together so quickly. I mean, if you look back at the 1930s, which was the case study that we had on what could go wrong, the world leaders didn't meet till 1933, after the crash had been in 1929. And then they met to agree to disagree and go away again until 1936 or 37. So this has been entirely different.
We're at a point in our own financial history and our regulatory history when we're really going back to tours, and at the same time being pushed internationally by people who've thought about the same thing and come up with different solutions because they had a different experience from ours. Sure. So again, let me say I'm delighted that we've got somebody of Greg's intellect to be leading that process, and somebody who has investment banking experience. He's not naturally a lawyer who thinks we'd regulate everything in sight.
But he's actually an accountant.
Well, that's great news.
Chartered accountant.
But he's going to have to have one very clear eye on how the regulatory framework ought to change in a different intellectual environment, and another clear eye on the costs of regulation.
And let me jump to that cost then, because we did hear when Alex made those opening remarks about a focus on encouraging small business. And that's something very close to the hearts of our membership.
Sure.
You know, whether they're running their own businesses as practices or advisors, trusted advisors to those small businesses. And that's the piece that they've really got to make sure that they don't swamp with the regulation.
Well, absolutely.
And kill that off.
And if I could just come in there quickly, this actually isn't so much on ASIC's territory. This has more to do with APRA and the financial system.
Yes.
Right? And the banks, I should say, rather than the markets. But, you know, if we turn up capital controls and stand on the banking system with new regulatory requirements, all the banks do is essentially to close up the window.
Well, they turn the tap.
Absolutely. Yeah. They increase the requirements that they impose upon those to whom they lend, right? Naturally enough, because we want the banking system to be less risky. Yeah. Well, small business is great. We know that, but small business is risky. You know that better than I do. And if you make the banks too chary, too wary of risk, well, they just pull back.
And that's not good for us.
Well, how are you going to finance your small business sector if the banks become more picky and the financial markets aren't reaching out into the small business sector? Securitization has died. Right?
Very much.
So I think the big issue for small business, and you, ladies and gentlemen here, as advisors to small business, you know, there's one piece of advice I'd give to a small business person at this juncture. It's to make sure you have a rock-solid relationship with your bank. Absolutely rock solid. Because the only ones who are going to continue to get credit from the banking system as this closes in will be those
who have the good relationships.
Who've got the relationships and who are utterly trusted by their banker. And this takes us back 30 or 40 years in the relationship between banks and their clients. It's gone back to relationship banking driven effectively by regulation and arguably by a changed way of thinking about financial markets.
If I could ask you to thank our panellists for their time, much appreciated.